Hey traders, this is Ron Haidt. Happy Thursday. Hope you guys are having a great day and a great week. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. In short, the markets got hammered again today. They did rally off their lows. The Dow was down over 400 points. The DIA ETF was down nearly 2%. It broke through that support level going back to February. If I take you back 2 years on the daily chart, the next level of support may be October, November of 2017. You can see there's basically a month and a half of consolidation there. It's pretty much the lows of today. If that falls, the next one's down near 210 or 21,000 on the Dow. We're at basically 22,800 right now, ballpark. That's a long ways, 1,800 point drop, $18 in the spiders. That's where it looks right now. Now, usually holiday weeks, pre-holiday weeks, side with the bulls. Certainly not the case this week. If you asked me at the beginning of the week, and I said it in a video, I'd probably say Tuesday, Wednesday, Thursday at the latest, maybe a bottom and then a rally into the holiday and things just stabilize until we get to the new year. Yeah, well, that's not happening, is it? Bears have control here, and if we go to the VIX, $VIX, it's breaking out. Now remember, technical analysis does not really apply in the same fashion to stocks and the volatility index, but a breakout's a breakout. I'm not going to say we're going to get up anywhere near these highs, but it's breaking out with volatility, the upside. That is not good for the indexes, and we see them breaking down. So there's no divergence here, to say, well, maybe this isn't the case. Maybe there's not as much fear, or the markets, it's like, no, fear is escalating and the markets are selling off. That's what's happening. Now here's the SPY. It lost 1.63%, basically 40 points. I'm going to have to zoom in a little bit. You can see how we took out this area. We're breaking down. The next major support's down near 240, maybe 70 more points, $7 in the SPY. I still have a bullish position in the SPY, but here's the thing. Just like I said in previous videos, I can use long puts. I can use short calls, and I have. There's different hedges we can do due to the short-term trend. Long-term, I'm still bullish. But in the interim, I can still hedge my position. So if you've never done that, it's a fantastic way to learn how to trade. In a paper trading account, pick a bullish or bearish position, and then when it goes against you, start implementing calls or long calls or short calls, or long puts or short puts, and see how that can help your position. It's really valuable to learn. Right now, the SPY's been down pretty much for the whole week. Let's just zoom in and take a look at that. 6 days in a row. I think we should get a bounce, but who knows if it's going to happen. In short, the bears just have control. Now, if we move on to, let's look at bonds, TLT. Market selling off, bonds higher, right? Nope, bonds lower. They reversed off their highs, finished the lows of the day, down 0.36%, and they're still playing with this previous resistance area. The money is just coming out of the market. It did come to bonds here over the past, 2 months, but it's not breaking out like the markets are breaking down. So it's really not a exodus of stocks into bonds. How about gold? No, not really there either, because you'd think gold would be taking out its previous highs, with the market taking out its previous lows. That's not happening either. But nonetheless, gold did break above the purple line, which is the 200-day SMA, the simple moving average, institutional moving average. We are about 10 days away from the seasonality window kicking in. Maybe gold's starting to run a little early. If I wanted to be bullish on gold, I might be able to consider a 20-day EMA in red or a 50-day SMA in orange as potential trailing stops. Again, it's always fun to play with paper trading and virtual trading because there's never any risk. Target right now would be up there to fill that gap around 123 or so. Silver is not coming along for the ride, which tells me that my confidence in gold truly putting in a bottom and making months and years of advances, it's not happening. When silver diverges from gold, we might get a bounce, but it's not one of those like the mother of all bottoms is in type of thing. The money still isn't flowing into the precious metals. It's just currently like more of a short-term sparkly interest, not a long-term trend change. Royal Gold, RGLD, we talked about this the other night. 200-day moving average is the one I want to watch. We almost got above it. We got back up there today above the 200-day. Up here is the target then, which are the low 90s. Agnico Mines had a really good day. It is now spending 2 of 3 days above its 200-day moving average. Target would be up there around 45, so maybe about 12% higher. If we take a look at Apple, it's finally coming into some major support. right here in February, March, there was a big swing low, and there was some consolidation in October of 2017. That's ballpark 150, $6 away. Pretty much another day like today, and it's there. Google coming into major support right around 1,000, $23 away. Maybe another 2 days like today. Facebook continue has issues. Maybe it should be renamed Scandal Book. They say they're not sharing data. They say they're not sharing private data and all that stuff, but they are, and they're selling it for a profit, allegedly. It's just a scandal every week. But you put that aside and just look at the stock technically. It was actually up today. Above the 50-day is still something I want to keep an eye on. Here is Conagra, CAG. Talk about announcing earnings on a day the market gets creamed. Well, that's how you lose 16+%. If I go out to 5 years on Conagra, we're blowing through other support levels. I mean, you're talking $20, 15% lower till there's double bottom in 2014, and then Carnival Cruise Lines got walloped as well. Its support area is low to mid 40s, 15, 20% lower. And then two stocks that are seasonally bearish right now, which are working, and that is GameStop. It just does not have a good December. And in fact, if I look out about 5 weeks on GameStop, it has an 81% historical track record of dropping. Now that's priceless information. So if you're out there thinking, hey, gaming, the holidays, probably a good idea, 8 out of 10 years this thing goes down. And for the last basically 10 years, the market's just done nothing but go up. And this one goes down. This is the power of understanding when these stocks move and how big money is rotating out of them and maybe into something else. Another one that has a bearish track record, ULTA. I mean, think about this. Earnings was December 6th. When the stock was up around 300, you knew that December is not a good time frame. In fact, for the next 3 weeks, roughly, it still drops about 63% of the time. That's way more than half, right? Well, from 300 to 230, how would you like to have about $66 back in your pocket on this stock? These are the types of moves you have to be aware of. Now, I held an event on Friday of last week, Wednesday of this week. We maxed out registrations on both. I'm going away next week starting Sunday. I'm taking the week off. I'm just chilling out. This is the last live event of the year for the top 10 proven bullish and bearish stocks to kick off the new year with a bang. So if you said, wow, it would have been great to know that UPS doesn't do well in December. It would have been great to know that GameStop and ULTA sell off. I could have done bearish trades or at least not buy them, right? I'm going to show you bearish, bullish ones. This is it. This is the final. I did a second chance yesterday, maxed out registration. I got inundated with requests saying, hey, can you just do one more? So here's what I'm going to do. I'm not going to do it Friday. I'm going to do it Saturday. Saturday morning, 10 a.m. Eastern, 7 p.m. on the West Coast. It's the last one of the year, and then I am done. So make sure to register at the bottom of the video, ASAP. I would expect we're going to max out because the last time I did a Saturday webinar, it actually might even be last year in December. That's how long it might have been. I don't do them very often. So this is your chance that if you work during the day, Monday through Friday, maybe you can make it to this one. So please register. You're not going to regret it. I promise you it'll be worth it. Just give me 5 minutes of your time, and I'm going to hook you into watching the rest of this webinar with me. I will show you the bullish, bearish ones. I'll give you entry and exit ideas. I'll show you which ones. I'll even give you my favorite ones as well. So tons of info. Make sure you're there. And I wish you and your families a very Merry Christmas and a Happy New Year. Also, Happy Hanukkah and Happy Kwanzaa too. So take good care, folks. See you later. Bye-bye.